Hello my crypto friends, welcome back to our channel. I'm very happy you're again with us. Today we have collected very interesting information about the project called Uris. I hope guys you will watch this review till the end. You will not have any questions about what Uris is. So be very attentive and let's begin. Uris Foundation is a non-profit organization founded by a mix of entrepreneurs, venture capitalists, and independent investors who share the belief that entrepreneurship is a cornerstone of development in the emerging markets, and that transparent and efficient innovation can foster an open, cooperative, sustainable, and prosperous future for raising quality of startup in every industry worldwide.
The Uris Foundation is most interested in helping startups with the power to catalyze economic growth and offer practical solutions to real-world problems. A growing number of new ventures are competing for the same few angels and VC investors. This process is time-consuming, distracts focus away from the business, generates frustrations, and leads to the worst of tourism, the eventual failure of the company, not for the lack of product, market fit, talent, but for the lack of money. Many innovations and ideas in the emerging world never achieve their full potential. They wither and die losing without ever sharing with others their technology, innovation, and financial experience.
Why? Because it's all about incentives. The managing partners make more money by charging a small percentage fee in a big fund than loading the same or even a higher percentage fee in a small fund. In the VC ecosystem, it's easier to find a $50 million or $100 million venture fund than it's to see a $1 million or $5 million fund. As the size of each fund gets bigger, so does their smallest ticket. It's not operationally possible for a $50 million fund to invest $1,000 or $250,000 tickets. These VC funds investments are concentrated in ventures that already have raised money and has a proven record of accomplishment. This goes to show the supply of early-stage capital for entrepreneurs in the technology subsections is highly constrained. Hence, the capital allocation dedicated to early-stage projects is insufficient and often left to independent angel investors. Independent investor challenges.
For investors, being an independent investor and not being a partner of any firm, it is hard to find the perfect startup or project to back. It will be limited to your contact, and they are contact, so it is a reduced pipeline of options to choose a plan. Also, once the investor finds one, being independent, it is also an issue while making due diligence of the company. Angel investors do not fill the gap created by the lack of VC funds. Angel investors usually participate with lesser amount of money, meaning those investors are needed to fulfill the startup's round successfully. If startups do not have access to networks, so independent investors, which are almost non-existent in emerging markets, there is simply not access to funding. It is hard to find sophisticated funding vehicles. As an independent investors, it would be difficult to make complete due diligence on the investee company.
Lack of liquidity. Investments in emerging markets comes with an increased level of risk in administrative, political, and economic areas. A major challenge comes from the fact that there is no liquidity market where an investor can sell the shares bought.
Raising a VC fund in emerging markets can be challenging due to regulatory obstacles and difficulty raising funds. For instance, in many countries, institutional investors are banned from investing in certain venture capital due to the elevated risk and low liquidity of the investment. This automatically limits the funding available for VC, compared to countries like the USA or the UK, where VC is merely another asset class in the portfolios of the more considerable pension fund. The limited record of accomplishment of most local VC managers is also a drawback when approaching family offices or similar potential limited partners investors in the fund.
Regulations and restrictions. Regulations and restrictions. They confer that most startups cannot share their ideas with the world. For investors, it's difficult to invest in international startups due to the platforms and countries' regulation. In some countries, the legal framework is just not adapted to these vehicles. The regulators stall the approval of new funds because they do not understand them, or only they need the fund to follow the costly regulation, having an external supervisory board. The US is by far the country with the most VC firms and the one with the most assets under management.
As the US draws most of the VC fund worldwide, emerging market startups struggle to fundraise in the USA. They usually lack the network and the resources to meet with American VC managers. The number of cross-border investments, particularly between US-based VC funds and emerging market startups, is limited to a handful of deals per year, and typically in later stage rounds. For all these reasons, raising a local VC fund in emerging countries can feel like fundraising for a startup. Both talented managers and talented entrepreneurs face the same funding gap.
Crowdfunding challenges. Less than a third of crowdfunding campaigns reach their goals. It's what states Kathleen Clifford from Entrepreneur.com. Less than a third, meaning the majority does not reach the funding goal. Even if they raise half of the target, they got none of the money, but with money spent on the campaign. This is due to multiple factors explained further in this document, but reaching the goal for entrepreneurs is difficult.
Regulations, paperwork, and regulatory requirements are another significant obstacle to participate in these platforms. From an entrepreneur standpoint, there are limitations to a successful campaign and high barriers to access reliable platforms. In the US, Jobs Act limits the amount per investors and the securities and the investors. High fees. Another big issue is the prohibitive fees that some platforms charge for raising funds. They typically range between 5–8%, and the added payment processing fee adds another 3–5% to the total cost. Lack of demand. Another of the problems creators face is the lack of demand for their project. The lack of investors wanting to put their money into the company. Underdeveloped startups. Modern crowdfunding started around 20 years ago with the band raising funds from fans. And since then, this way of financing has been an uprising. Crowdfunding platforms have appealed to help both investors and project authors, and the industry has been continually growing. These platforms have helped entrepreneurs to expose their companies, confirm their ideas, and the primary goal to raise funds.
Platform ecosystem. Their ecosystems aim to offer simplified user experience, transparency, immutability, security of data, durability, reliability, no center point, increased efficiency, and reduced costs. These professionals will distribute capital most efficiently and act as a filter or sounding board to make sure each project is possible, practical, and will generate a direct impact. Supporting entrepreneurs and granting them low-cost access to capital helps the emerging economy in ways.
These guarantees that clever ideas will get funded. They will have no control over the investment decision. A better user experience and attracting investors onto the exchange, the platform will sustain sufficiency of current sources for startups to raise funds. This is how they will foster higher access to early-stage capital for promising innovations.
Benefit. First estimated startup investor. They have done what no other investment management service has done in the 21st century. They will give a seed capital that will help these professionals leverage and multiply their effect of changing big money into startup. They will be the first decentralized startup investor. With their platform, your startup can get a boost of 10% toward your goal. Payback program.
The Uris token's unique benefit sets them beyond any other cryptocurrency available on the market today. No other similar platform guarantees the buyback of the coin, making Uris a genuinely unique cryptocurrency. A token buyback is the reacquisition by a company of its native token. It offers a more flexible way of liquidating assets to investors. The Uris exchange platform will generate a constant demand for Uris coins and a continual flow of transactions between parties that will sustain the value of the currency. They believe in this platform and its tokens strongly. That is why they will buy back the tokens every time a user asks. They will set aside a fund for their token buyback program. This means that any holder of the coin, the platform can apply for a buyback of the coin and exchange them for any other crypto or fiat money, even if there is no else wants to buy these coins. So all Uris tokens have a guaranteed source to liquidate regardless of any secondary market. Such transactions are legal and encouraged by regulators through safe harbors against the insider trading liability.
Summary. In summary, existing crowdfunding sites are hardly a solution for emerging market startups, even if the creators made it through the entire process and all the limitations. Most people who want to invest their money in projects face enormous barriers to do so. So the easiest way is the crowdfunding sites, but when trying to sign up, there are requests that the investors cannot fulfill. For investors, crowdfunding does not meet standards. From the investor's standpoint, it's even more complicated. Between fees and campaign costs, they could lose 40–50% of the funds raised, making it hard to reach their promised goals. The project backers have no guarantees when investing their money. They do not know if the creators are using the capital well, and the risk of losing it high. They aim to aid all compliant entrepreneurs in overcoming these challenges and more. So guys, hope that you like this review, but please ask your questions below if you have any. Please subscribe to our channel to see me again. Of course, have a great day. Bye. I wish you good luck.